Ever wondered how some businesses seem to effortlessly understand which parts of their operations are thriving and which might need a little extra attention? What if I told you there's a powerful, yet often underutilized, feature within QuickBooks that can give you that very insight? We're talking about class tracking. Now, you might be thinking, QuickBooks? Class tracking? Sounds a bit technical. But trust me, it's not as daunting as it sounds, and the benefits it can bring to your business intelligence are immense. Think about it, your business isn't just one monolithic entity. It's likely composed of different segments, whether those are distinct product lines, various services you offer, different departments within your company, or even multiple locations. Wouldn't it be incredibly valuable to see the financial performance of each of these individual parts? To know exactly which service is generating the most profit, which department is incurring the highest expenses, or how each of your locations is contributing to your bottom line. That's precisely where class tracking steps in. It allows you to categorize your transactions, income, expenses, even balance sheet items, by these different segments or classes, as QuickBooks calls them. This simple act of tagging your financial data opens up a whole new world of reporting and analysis. Instead of just seeing a single profit and loss statement for your entire business, you can generate separate reports for each class you've defined. Imagine having a profit and loss statement specifically for your online sales versus your in-store sales, or a breakdown of marketing expenses for each of your product lines. The power of this level of detail cannot be overstated. It moves you beyond simply knowing if your business is profitable to understanding why and where that profitability is coming from or not coming from. This granular insight empowers you to make smarter, more informed decisions. You can identify your most profitable areas and double down on those strategies. You can pinpoint underperforming segments and either take steps to improve them or decide to reallocate resources elsewhere. You can gain a much clearer picture of your true cost structure by seeing how expenses are distributed across different parts of your business. So, how do we actually get started with this powerful feature? The first step is to enable class tracking within your QuickBooks settings. Don't worry, it's a straightforward process. Head over to your QuickBooks preferences, usually found under the Edit menu, and look for the Accounting or Company Preferences section. Within these settings, you should find an option to enable class tracking. Simply check the box, and QuickBooks will then prompt you to decide how you want to use classes. QuickBooks offers two primary ways to use classes, one to each transaction, or one to each row in a transaction. The one to each transaction option is generally simpler and works well if an entire invoice or expense relates to a single class. For example, if you have a consulting service that falls entirely under your service class, you would assign that class to the entire invoice. The one to each row in a transaction option provides a more granular level of tracking. This is particularly useful if a single invoice or bill includes items that belong to different classes. For instance, if you sell a bundle of products that fall under different product lines, you can assign a specific class to each item on the invoice. Similarly, if you have a general office supply bill, you might want to allocate portions of that expense to different departments based on their usage. Choose the option that best suits the complexity of your business and the level of detail you need in your reporting. Once you've enabled class tracking, the next crucial step is to define your classes. Think carefully about the different segments you want to track. These could be your different service offerings, e.g., web design, SEO services, social media marketing, your various product lines, e.g., clothing, accessories, home goods, different departments within your company, e.g., sales, marketing, operations, or even different physical locations if you have multiple branches. It's important to establish a clear and consistent naming convention for your classes. This will make your reports easier to understand and analyze. Avoid using vague or ambiguous names. Instead, be specific and descriptive. For example, instead of just services, use residential cleaning services and commercial cleaning services. After you've defined your classes, the real work begins. Consistently assigning classes to your transactions. Every time you create an invoice, record an expense, receive a payment, or enter any other financial data in QuickBooks, you'll now have the option to select the appropriate class. This might seem like an extra step initially, but it quickly becomes second nature, and the payoff in terms of insightful reporting is well worth the effort. Be meticulous in this process. Inconsistent or incorrect class assignments will lead to inaccurate reports and undermine the value of class tracking. Train your team members on the importance of accurate class selection and establish clear guidelines for how different types of transactions should be classified. Now, let's talk about the real magic, the reports. Once you've been consistently classifying your transactions, you can start generating class-based reports. QuickBooks offers a variety of reports that can be filtered or customized by class. The most common and useful of these is the Profit and Loss by Class report. This report will show you the income, expenses, and ultimately the net profit or loss for each class you've defined. Imagine being able to see at a glance which of your service lines is the most profitable or which product category is driving the most revenue. This information is invaluable for making strategic decisions about where to focus your efforts and resources. Beyond the Profit and Loss by Class report, you can also generate other reports, such as the balance sheet by class or even sales and expense reports broken down by class. Experiment with different reports and customization options to find the views that provide the most meaningful insights for your business. Class tracking isn't just for large corporations. Small businesses can benefit immensely from understanding the profitability of different aspects of their operations, even if they only have a few distinct service offerings or product lines. It can help sole proprietors and freelancers track income and expenses related to different types of projects or clients. One important thing to keep in mind is that class tracking is most effective when implemented consistently from the beginning. Retroactively classifying a large volume of past transactions can be a time-consuming and potentially error-prone process. So, if you're not already using class tracking, the best time to start is now. With that said, thanks for watching, and until next time.